Hi, welcome back to our YouTube channel. My name is Ting Ting. Our topic for today is what is final settlement value. I know this is another jargon for you, another bombastic word for you, or another terminologies for you. Don't worry, today I'm going to explain to you what is exactly this final settlement value. This is a word or a terminologies that you can find in your contract specification. I'm not quite sure whether you read it before or not. And today our topic, we are going to cover what is exactly this final settlement value and how do you calculate it. Now, if you are only getting started in your futures trading, normally I don't cover this topic. But if you already trade in futures market for a while, I think this is the time for you to understand exactly what is final settlement value and how do you calculate it. Especially this is relevant if you are trading index. For example, those products that is cash settled. We have two types of settlement. Still remember, one is cash settlement, another one is physical delivery. So this is relevant to those who are trading in the products that based on cash settlement. So we're going to explain to you exactly what is final settlement value. Now, before that, if this is your first visit, please remember to subscribe to our YouTube channel and on your notification bell. Now, as usual, before we start, we need to do a disclaimer. Our topic for today is only meant for education purposes. There's no buy or sell call. Now, let's start with the first concept. Now, upon expiration, for example, we are going to look at two commonly traded products by retail. One is FKLI, another one is FCPO. Now, what kind of methods that upon expiration, what can you do if you yet to close your position or your open position or your contracts that you are having? Now, technically, we have three methods. One is physical delivery. If you're holding FCPO contract, they are having a physical delivery. And another one is for FKLI. Technically, you're having a cash settlement. So the second one, which I believe last topic already covered, which is the rollover. How do you roll over a contract? Meaning you renew a contract. So we have three types. Technically, not only these three types, we have more than that, but these are all the commonly being used method by many of the retail. So today, our focus, we are going to look at cash settlement. FKLI. This final settlement value is only referring to those who are having a cash settlement. So in our context, in your context, it's more towards like FKLI, FM70, etc. So let's look at this. How do you do that? Now, before that, we need to do a very quick recap on how do you calculate your profit and loss. So for example, on 5th of August, I bought one contract of FKLI at the price of 1,800. Then let's say on 6th of August, I sold one contract FKLI at the price of 1,816. So technically, how do you calculate your profit and loss? I believe you should be able to answer this question, especially for those who are already long in the futures market. So very simple. I'm taking my selling price, the selling contract price, which is 1,816 minus 1,008 times 50 ringgit Malaysia, because FKLI, each point is equivalent to 50 ringgit Malaysia. So technically, you're going to have 800 of profit. Still remember, so we are taking a selling minus the opening price, which is the buying price, times with 50 ringgit Malaysia. Now, if I'm going to change this scenario to something that is slightly different, which is I'm still going to buy one contract of FKLI at the price of 1,008 on 5th of August. But on the last day, I did not sell on 6th of August. Rather, I'm holding the contract because let's say, for example, the market still favor me. I still want to hold on to my contracts. Or let's say, for example, another method is you forget about it. You bought already, many of us, right? We bought already, you forget the contracts and you just leave it alone. So let's say on 30th of August, you still do nothing. 30th of August technically is the last trading day because Malaysia, 31st of August is definitely a public holiday, which is our national day. So let's say, assuming 30th of August is the last trading day. Let's say, for example, it is a Wednesday or Thursday, 30th of August, and you decided to do nothing. It can be either you forget about it or you purposely leave it. You don't want to do anything. So let's say you bought on 5th August, you bought one contract at the price of 1,008 and 30th of August, you do nothing. So what will happen? So this is the concept. what will happen to your one long contract at 1,008? You cannot leave it unsettled. You cannot leave it hang there doing nothing. So definitely something is going to happen to this contract. So what is going to happen? It cannot renew a contract by itself. There's no auto renewal for you. So let's say, for example, on 30th of August, you still leave it, you don't do anything. What will happen to your one long contract at the price of 1,008? So this is the question that we need to answer. Now let's see. If you look at your contract specification, look at for example, the last part, final trading day. So on the final trading day, this FKLI is based on cash settlement. So there are two keywords. One is cash settlement, and this cash settlement is based on final settlement value. So two keywords. So one is cash settlement, meaning cash settlements any different, you pay by cash or you receive by cash. That's it. That's the reason why we call it as cash settlement. And second keyword is final settlement value. So this is the words that we need to understand exactly what is this final settlement value. This is a value that you need to understand. So let's start with this concept about final settlement value. Can you see that? Now, if you go and read through, for example, let's say just on the 5th of August you bought 1,008. So let's understand, on 30th of August, you assume that you're going to sell one contract. But what price that you are going to sell? So this is the part that is a question mark, because you do nothing. So you're not going to close, you are not going to do anything. So this is the part that we need to understand. Because I need to calculate my profit and loss. Am I correct? So I need this value to calculate my profit and loss. Still remember just now, I use my selling price minus off my buying price. Then only I can calculate, correct? But right now, I don't have this value. And this is the value which what we call as final settlement value. So this is the one that we need to calculate. So remember, the keywords is final settlement value. So we need to understand how to find out this final settlement value, or in another words is, how do we calculate and derive this final settlement value? So let's start with the understanding. If you go and read your contract specification, I noticed that the latest version, right, just now I checked via Bursa Malaysia website, I don't see this part for FKLI, the latest update, when they update, for example, based on the trading hours, which they already changed. But I noticed that this is available in FM70 contract specification. So anyhow, you can refer to this, because this is I screenshot many years ago, but it will be the same. If you click into the details of the contract specification, I believe you'll be able to get this particular concept up. So look at this final settlement value. How do you calculate? So they define the contract specification. How do you calculate this final settlement value? So you can read it by yourself. What I advise you to do is you pause right now. I repeat, you pause right now and start to read. And try to interpret by yourself whether you can understand what is being written. But trust me, many of you, right, once you start to pause and start to read, right, you still find something wrong. You can't really understand. That is normal. Trust me, that is normal. Because even last time, when I started in this industry, so when I read, I also can't understand. But if you dissect it out, then you'll find that it's quite easy to understand. So I'm going to explain to you exactly what does this five lines of paragraph meant to you. So there are a few points that you need to highlight. Now, first thing, the concept about this final settlement value is based on FBM KLCI. It doesn't based on your FKLI, it is based on FBM KLCI. So this is the index that every day we refer to. For example, whether our market is weak, is strong, is a bullish market, or is a bearish market. Always people are looking at this FBM KLCI, which consists of 30 index members, 30 counters, or 30 stock counters. So this FBM KLCI, and they would derive this based on the market cap itself. So they calculated, And do you know how often this index changes? Just test your understanding. Some of you might think that every day only change once. No, this index changes every 15 seconds. Not every 15 minutes, yeah. It's every 15 seconds. So every 15 seconds, they will take the 30 index members and they will base on the stock price to start to calculate. So you will get this index being changed on every 15 seconds. So these are the two concepts that you need to understand. So once you understand about this part, let us run through the whole concept. So these 5 lines, what do they mean? So look at this. There are only a few keywords. First is average value. So we need to total it up, then we take the average. And these average values we take every 15 seconds. Can you see? Because the index changes every 15 seconds. So every 15 seconds we take the index, then we total up, then we average it out. That's what we meant by average value. So we're going to take this every 15 seconds of interval from 3:45, 30 seconds, 3 o'clock, 45 minutes, 30 seconds, up to 4:45, 15 seconds. And plus 1 value at 5 p.m. Because still remember, you have trading at last, etc. Then subsequently market close at 5 p.m. So we are going to take 3 o'clock 45 minutes 30 seconds up to 4 o'clock 45 minutes 15 seconds plus 1 value after 5 p.m. And you are going to exclude the 3 highest value and 3 lowest value, which is what we call as outliers. So those extreme figures, it's like your average of your class height, right? Let's say, for example, average 160 centimeter. Then suddenly we have 1 or 2 of them, right? They are very tall, let's say 200 centimeters. So this is a bit extreme value, so we are going to take it out to exclude that. Then when you calculate, it makes more sense. So we are going to exclude the 3 highest and 3 lowest value. Then you are going to average it out. So what does this mean? I'm going to share it with you. For example, let's say our index, FBM/KLCI index at 3 o'clock 45 minutes 30 seconds is at 1,801.35. Then this is the one of the index price. Every 15 seconds, can you see that 3 o'clock 45 seconds, 1801.28, then 346, 1802.02. You total up every 15 seconds interval. You total this value, or we have the value until 4:15, 15 seconds. Let's say it's 1800.09. 5 o'clock, the last price is also 1800.09. So we are going to total up these all figures, which we have 235 ticks, which we have 235 index point that we are going to total up because we need an average value. Am I correct? So let's say you calculate 1801.35 plus 1801.28 plus 1802.28. You total up, then last I total up. This all we divide by 235 ticks. You're going to have 235. When you exclude the 3 highest and 3 lowest, in total you have 235 index point. So let's say, for example, if I average out, the figures is 1804. Let's say, because in between it might be 1805, 06, right? So when it average out, I have 1804. So this is what we call as final settlement value. So there's a way to calculate this final settlement value. It doesn't plug from the sky. So this is the methods that you're going to calculate. And if you read your contract specification, this is clearly being defined. It's not that they simply take the figures to settle your contract. So let's say my final settlement value is 1804. What does this mean? So you directly, meaning that if you bought a contract at the price of 1,800 and on 30th of August, you don't do anything, you leave it. At the end of the day, they will auto help you to sell one contract based on the final settlement value, which is 1,804. So let's say, for example, if 5th of August you sold one contract at 1,008, then you do nothing and on 30th of August, they will help you to buy back one contract at 1,804. It doesn't matter you buy or sell, they'll auto close for you at this price. Everyone the same. any open position, any position that remains open, any contract remains open, you're going to close your contract at 1,804 points. So automatically, you calculate 1804 minus 1,008 times 50 ringgit Malaysia, you are going to have a profit of 200. Correct? So, but these methods, right, it's not easy for retail to calculate. There are 3 methods that is easier for you to, rather than calculate by yourself. Because impossible, you're going to open your Excel and you key in one by yourself. So I'm going to summarize 3 methods that are easier for you to refer to, rather than you calculate by yourself. But at least you understand how do they derive this final settlement value. Normally in my class, right, if you're beginners, normally I don't like to teach this part because I find that it's not really relevant to you. But once you are trading in the market for a while, right, definitely I will encourage you to understand this because it will help you to understand better. That's why it is not a surprise that some of the traders long in the market, right, they might not really understand how to calculate this. But if you understand, at least there's another knowledge for you. Now, even this final settlement value itself, right, many of the big traders, big institutional clients, right, they are trading based on this final settlement value itself. Even half a point, you are easily making tons of money with it. Now, 3 methods. Even if you do not want to calculate by yourself, 3 methods for you to understand exactly what is this final settlement value. First thing, for example, because we start to calculate at 3:45, by 4:07, more or less is already halfway through. So roughly you can gauge the market. So you look at the buyer and the seller. So right now the buyer is at 1830.5, seller is at 1,831. More or less you already understand, or you're going to expect based on the current calculation at the point of 4:07, the market current final settlement value they already calculated as about 30.5 or 31. Because don't forget, there are many big institutional clients or big retail traders, they are doing that. And they definitely use a method to calculate, and it's auto-calculated because many of them, they program it and the system will auto-calculate for them. Unlike retails, if you're going to key in and calculate by one, it's very difficult. This is they transfer in and they program it, they will auto-calculate. And many of them trading. That's why you can see that on the last 1 hour, right, the market buying quantity and selling quantity is huge. Because normally you're going to see a single digit or double digit. Double digit is considered huge already. But on this last 1 hour, you're going to see that it's more than 100 contracts buying and selling. Because many of them, they are trading on this last 1 hour. But this is not something that retail is easy for you to trade, especially if you cannot automate it. And because some of the brokers, right, why even you are trading and making half a point of profit, right, you can still make money because many of the brokers, they only charge you, they don't charge you the commission. They only charge you the clearing fees, which is 1 ringgit Malaysia. So if you look at this buyer and the seller, 30.5, 31, then you're going to see that this is the first method. You can roughly gauge that the market is going to settle at 30.5 or 31. And the best time to look at it is, let's say, at 5:01. Because the market already closed, your final settlement already finished calculated. And the buyer and seller is still at 30.5, 31, meaning the market either settle at the price of 30.5 or 31. That's it. So this is the first way for you to gauge this final settlement value. And trust me, this will not be too wrong because many of them, they already calculated. Impossible, they are going to buy or sell at the higher price or lower price than this. So this is one of the method. Second method is, in fact, you can call your brokers directly. You call them, ask them what is the final settlement value, because you're holding a contract, definitely they will let you know. Now, another method, if you find that it's not much of difference and somehow you already decided to hold until let it settle, so nothing relevant to you, another method is you can wait until night time, you receive your statements, daily statements, and automatically they are going to cash settle for you and they are going to auto settle for you based on this final settlement value, and they will show you what is the final settlement value. So this is the easier method for you to understand. So I repeat, 3 methods. Either you log into your trading platform, you look at the buyer seller, more or less you will know what is the final settlement value. Second method, you can call, very conventional way. You can call directly to your brokers and try to ask them the final settlement value. And the third one, the easiest method is you just directly refer to your statement, because they'll auto settle for you, and this is the standard one. Everything is being automated. So the keywords for today is we need to understand the final settlement value itself, because we need a value to auto close, or what we call it as auto settle our contracts. So our topic is up to this. Then before we end, please remember to give us a thumbs up. And please remember to subscribe to our YouTube channel and on your notification bell. My name is Ting Ting. I'm going to see you in our next session. Bye bye.